Joining me now to discuss BTC price and other Bitcoin news is our week in review panel. We've got CoinDesk Managing Editor of Technology, Christy Harkin in Toronto, and Managing Editor of Markets, Brad Cowan in Austin. Happy Friday, Brad and Christy.
Hello, Christine.
Thanks, Christine.
Hello. All right, good to see you guys. So, Brad, we're seeing some more red in the markets right now, and this has Guggenheim CIO Scott Minerd predicted that Bitcoin could go as low as $8,000. Do you see any indicators showing that could be the case?
Well, it's Bitcoin. Don't rule anything out, but I don't think most people who are looking at the market pretty closely don't really see us going that low. Our analyst, Dominic Dantes, just put out his report kind of looking ahead. And even in the worst case scenario sort of charts, if you sort of map, a lot of this is just kind of looking at charts and, but if you look at the last bear market, we did go 80% down from the peak. And if we did that, that would kind of put us in the sort of high teens area. So not 8,000.
Not as low as 8,000 though. And I mean, Minerd doesn't exactly have a track record for being accurate. We did you did an article, in fact, showing that every time he makes a prediction, it actually goes the opposite way. So maybe we'll see a surge.
He's not always wrong, but it's, if you look at it, it looks more like chance than,
$600,000 Bitcoin.
Well, yeah.
$8,000 now. Come on.
People are so gaga when these traditional finance stars, weigh in on crypto and they get a lot of ink, but they don't really necessarily know what they're talking about more than the crypto traders. So it's just kind of interesting, that dynamic.
He said Bitcoin would be at $600,000 when it was rising at its peak around 60,000. Instead, it went down, and now that Bitcoin is down, he thinks it'll go even lower. Probably go higher, who knows? And there's also speculation over a Bitcoin super cycle. What's that all about, Brad?
Well, okay, the Bitcoin super cycle was a theory. Dan Held was a big proponent of this theory on Twitter, but it was the idea, if you look at Bitcoin's past market cycles, there is some argument that they come in 4-year turns, especially if you look at annual returns, that they tend to go up in the year of the halving and go up in the year after the halving, and then they go down in the year after that, and in the third year, and then they go back up in the fourth year, and then the cycle starts anew. That's the belief in the Bitcoin halving-driven market cycle. The super cycle theory was a theory that, this time's different. There's new trends in the Bitcoin market, and we're not going to have this big sell-off like we have in some of the past 4-year cycles. But, this kind of the Twitterati chatter today is just, kind of making fun of that. Here we are in year 3 of the Bitcoin halving cycle, and we're down pretty big for the year. So anyway, that's just the latest,
So where do you see
nonsense.
support and resistance amid this tight trading range we've been in for the past couple of weeks?
Dominic, according to Dominic's numbers that the story we just published, 25,000, that's kind of a low that we've seen recently. That was a May 9 low. And also this week, I think we almost got to that. And then 22,000 is the 200-week moving average on the weekly chart. So that could also be something to look at. Really the $30,000 level, though, is kind of, we've been up and down around that all week. And so that is really the level to watch, I think.
Yeah, and behind the scenes, we're still seeing a lot of engagement, a lot of building of goodwill for crypto and Bitcoin. In Europe, at the World Economic Forum, our CoinDesk team is just wrapping up there, and our reporter Nicholas Day mentioned that there was been a greater crypto presence there and more engagement in the panels related to the World Economic Forum and various leaders and the world's elite who are congregating upon Davos, Switzerland. Unrelated, Christine Lagarde, chief of the IMF, also saying that crypto is worth nothing, but she admitted that her son is trading it. So the next generation is already ahead. And in the Central African Republic, we heard news of Project Sango. They're going to create a crypto island and basically an economic hub for crypto after passing a Bitcoin law making Bitcoin legal tender in the country. They want to have a digital wallet. They want to create a legal framework around cryptocurrencies as well as a metaverse. And in Oslo, we saw a group of Bitcoiners descend upon the Norwegian parliament, educating lawmakers about how Bitcoin can can help the fight for humanitarian rights. And in the meantime, we also saw this week mining difficulty was adjusted. And Christy, this is your forte. So I saw that Bitcoin's mining difficulty adjusted downward on Wednesday. So it's less difficult to mine Bitcoin, but with the price decline overall, it could mean that miners are turning off machines because it's not that profitable. What are your thoughts?
Well, it's a bit of both. It's a balance. Don't forget also that the mining difficulty adjusts based on figures or the algorithm that follows the trend of mining success rates in terms of speed over the past 2 weeks. So it is reactive. It reacts to how the miners performed over the past 2 weeks. And what happened was that some machines are likely to have been turned off. And that's for a number of reasons. So it went down, not by a whole lot, like 4% or something, 4.5%. And that's going to happen. It's not usual for Bitcoin, the Bitcoin difficulty to adjust continuously up or continuously down in long stretches. You're going to go up a few, you're going to go down one. You're going to go up a few, you're going to go down one. Depending on what's going on, you may go down a few and then up one. So it's not like all of a sudden there's been like a major screeching of the brakes. So the thing is that over the last 4 years or so, many of the S9s, the mining rigs, the ASIC rigs that came out in 2017, they made up like something like 25% or something, or 20% of the total hash rate. That's a lot. And those machines were really only clocking about 14 terahashes per second. They were relatively slow. They became relatively slow over the last 5 years. The new ones are now delivering like 225 terahashes of computer power per second. So as these new machines come on and they are obviously going to be more successful, some of the older machines are starting to turn off simply because they're just not efficient enough. They're not competitive enough. And as we lose some of those less efficient machines, we're going to see a small drop in hash rate, because those guys, if they want to be successful, be profitable, they have to be paying less than 8 cents per kilowatt hour for electricity. And that is, that's a hard price to find everywhere. So anybody who's paying more than that, on an S9 is probably going to have to turn off, or they're just not going to be profitable. And that's basically what's going on with the hash rate this week.
And folks are taking that as an opportunity to potentially buy these older rigs?
Well, yeah, because see, the thing is that many of these larger companies have been putting in orders and getting them delivered over the last little while. And now they're like, actually, we're probably going to have to sell some of these in order to make some of our payment obligations. So there will be some coming on the market that are new. There will be some, don't forget, there's also still a pretty robust secondary market out there for less efficient miners that are able to sell to some hobbyists, but also to other entities that have really, really good sources of cheap energy, and they don't mind taking something that's a little less efficient because they're paying maybe 4 cents a kilowatt hour for electricity. So it all balances out somewhere in the market.